The African Continental Free Trade Area, AfCFTA, represents a historic milestone in Africa's economic integration. It promises to boost intra-African trade by reducing tariffs and easing cross-border trade barriers. However, despite the immense potential, managing value-added tax across different countries presents significant challenges. Therefore, efficient VAT coordination will be crucial to maximize the benefits of African Continental Free Trade Area, particularly in ensuring seamless cross-border transactions and reducing compliance costs for businesses. In this video, we will explore the core VAT challenges under African Continental Free Trade Area and propose strategic solution.
Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos.
AfCFTA launched on January 1st, 2021 with the aim of boosting intra-African trade by eliminating tariffs and non-tariff barriers. Its scope also included facilitating trade in services, investment, intellectual property rights, and competition policy. By establishing a continent-wide free trade area, AfCFTA seeks to drive industrialization, job creation, and economic diversification across Africa. Now, let us look at key objectives of AfCFTA. Eliminating tariffs on 90% of goods and reducing non-tariff barriers, thereby promoting the free flow of goods and services. Boosting intra-African trade to reduce the continent's reliance on imports from outside Africa and to enhance regional value chain. Promoting regional integration by establishing common trade and investment rules. Lastly, creating a more predictable and transparent trade and investment environment which can attract foreign direct investment. For African Continental Free Trade Area to succeed, integrating key regulatory frameworks, particularly taxation, is essential to prevent issues like double taxation, non-compliance, and tax evasion in cross-border trade. Cross-border VAT, the challenges and opportunities under African Continental Free Trade Area. VAT harmonization across African Continental Free Trade Area member states. The lack of VAT harmonization among AfCFTA member states presents significant challenges for businesses engaged in cross-border trade. Each country employs different VAT rates, thresholds, exemptions, and administrative practices, leading to compliance complexities and potential unintended consequences such as double taxation and tax evasion. To maximize AfCFTA potentials, member states must strive for VAT harmonization, align policies to simplify compliance and enhance revenue collection. This could involve establishing a uniform VAT code across member states, similar to the European Union's VAT system, where member states follow common principles while retaining control over settling VAT rates. Examples of disparity in VAT system. South Africa imposes a standard VAT rate of 15% while Nigeria applies a 7.5% rate. Kenya zero rates exports, but some African countries apply varying VAT exemptions on certain goods and services. Administrative processes for VAT registration, filing, and refunds differ significantly across borders, adding to the compliance burden. Impact of VAT harmonization. A harmonized VAT system would enhance cross-border trade efficiency, improve revenue collection, and reduce tax avoidance risk. However, achieving harmonization may encounter resistance as member states may be hesitant to relinquish autonomy over tax policy, which is a critical tool for managing domestic economic conditions. Place of supply rules for goods and services. Determining the place of supply is critical in cross-border transactions as it establishes which country has the right to levy VAT. While the general rule applies that VAT is charged in the jurisdiction of consumption, that's destination principle, inconsistency in interpretation across different countries can lead to disputes and compliance issues. For goods, the destination principle typically applies, meaning that exports are zero rated and VAT is charged in the country of import. For services, however, the rules are more complex. Services provided across borders, such as professional consulting or digital services, often face varied VAT treatment depending on the local VAT laws of each country. Now, let's look at the key VAT challenges in cross-border services. Digital services. The increasing prevalence of cross-border digital transactions, such as online streaming, e-commerce, and cloud computing, highlight the need for clear VAT guidelines as countries without robust frameworks risk losing significant revenue. Telecommunication. Specialized VAT treatment is often necessary for cross-border telecommunication services, including mobile roaming and internet-based services, to ensure accurate VAT application based on service consumption location. Establishing consistent place of supply rules is essential for mitigating these challenges and ensuring equitable VAT application across member states. VAT refund mechanisms for exports. Efficient VAT refund mechanisms are crucial for businesses engaged in cross-border trade. Under the destination principle, exported goods and services should be zero-rated for VAT, meaning that exporters can claim refunds on the VAT paid on their inputs. However, in practice, slow and bureaucratic refund processes in many African countries can create cash flow challenges for businesses. Streamlining VAT refund mechanism under African Continental Free Trade Area would enhance the competitiveness of African businesses, reduce the cost of exporting, and ensure that businesses do not face unnecessary financial burdens. Best practices for improvement include automated refund processes, streamlining procedures to reduce delays and enhance transparency. Establish clear timelines, settling explicit processing timelines for refunds with penalties for delays. Simplified documentation, reducing administrative burdens through streamlined documentation requirements. African Continental Free Trade Area provides an opportunity for member states to collaborate on standardizing and improving VAT refund systems to support cross-border trade. VAT treatment of goods versus services. The VAT treatment of goods in cross-border trade is generally straightforward, following the destination principle. However, services, especially digital and intangible services, present more complexities. VAT on goods. Goods exempted from one African Continental Free Trade Area member state to another should be zero rated, meaning no VAT is charged by the exporting country and VAT is levied in the importing country. Importers must account for VAT in their local jurisdictions, either at the border or through self-assessment, depending on the local tax regulations. VAT on services. Professional services. For cross-border professional services, VAT is typically charged where the customer is located. Digital services. With the growth of e-commerce and digital platforms, African Continental Free Trade Area member states need to develop a consistent approach to taxing digital services, ensuring that VAT is applied to cross-border digital transactions without stifling growth in the digital economy. VAT in the digital economy, a growing concern. The digital economy is one of the fastest growing sectors globally, and Africa is no exception. As African Continental Free Trade Area seeks to enhance trade in services, addressing VAT treatment for digital transactions is increasingly critical. Many African countries have yet to fully implement VAT policies for digital services provided by non-resident suppliers, resulting in substantial revenue losses and compliance challenges. While countries like Kenya, South Africa, and Nigeria have begun implementing VAT on digital services, a consistent approach across the continent is essential. African Continental Free Trade Area can facilitate this by encouraging member states to adopt unified policies for taxing the digital economy. Lessons from VAT harmonization in other regions. AfTA can draw valuable lessons from other regions that have successfully harmonized VAT systems to facilitate cross-border trade. Two relevant examples include European Union VAT system. The EU VAT framework illustrates how harmonization can support economic integration while allowing members to retain flexibility in VAT rate setting within agreed limits. By applying common rules on VAT compliance, place of supply, and VAT refunds, the European Union ensures smooth cross-border transactions while balancing harmonization with national fiscal needs. East African Community. The East African Community effort to harmonize VAT policies demonstrates the potential for simplifying compliance for businesses and reducing trade barriers. While challenges remain, the East African Community experience shows that VAT harmonization can contribute to regional economic integration, particularly by creating uniform rules for VAT refunds and compliance. Now, let's explore key recommendations for stakeholders involved in the African Continental Free Trade Area Initiative. For governments, commit to VAT harmonization by adopting common principles to ease trade barriers and simplify cross-border trade. Streamlining VAT refund mechanism by adopting automated processes and reducing bureaucratic hurdles to ensure timely payments. Clarify rules on digital services to ensure that resident and non-resident suppliers are taxed fairly. For businesses, stay informed on VAT changes to ensure compliance and avoid penalties. Leverage VAT planning to minimize exposure to VAT-related risk. Prepare for digital services taxation by ensuring proper registration and compliance system. For African Continental Free Trade Area Secretariat and policymaker, provide technical assistance to member states on VAT harmonization, promote best practices to improve efficiency and support the goals of African Continental Free Trade Area. Facilitate dialogue on VAT issues to address emerging VAT issues and ensure that VAT policies support trade. For international bodies and development partners, support VAT harmonization efforts. International bodies such as the African Union, the World Bank, and the International Monetary Fund (IMF) should support African Continental Free Trade Area's effort to harmonize VAT policies by providing technical assistance, capacity building initiatives, and financial support where needed. Foster knowledge sharing. Development partners can facilitate knowledge sharing among African countries by providing case studies and lessons from other regions, such as the European Union or ASEAN, which have successfully harmonized their VAT systems. In conclusion, effective management of cross-border VAT is essential for unlocking the full potential of AfTA. By harmonizing VAT policies, simplifying place of supply rules, streamlining refund processes, and ensuring consistent taxation for digital services, member states can foster an environment that encourages trade and investment. For businesses, staying informed about VAT developments within AfTA is crucial for maintaining compliance and optimizing tax positions. Governments must balance VAT harmonization with protecting domestic tax revenues to ensure the VAT system supports rather than hinders cross-border trade. Looking ahead, by addressing VAT complexities, AfTA can reshape Africa's economy, benefiting governments, businesses, and consumers across the whole continent. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.